Hello, Maverick traders. This is Rob Reinhold, and welcome to the Market Roundup, June 27th. And we had another pretty flat day today. In this session, we're going to be talking about what happened today. There's not a lot going on. It's really going to be talking more about tomorrow. But we're going to take a look at where we stand right now, and we're going to take a look at some possible setups for tomorrow's trading activity.
Disclaimer: this video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
So we've had some really flat days for the last couple days. And if we take a look at where we stand here, we see the Dow up slightly, NASDAQ, Qs up slightly, or the S&P. Look at the Russell. Russell had a big move today. So we are getting this, again, I don't want to call it broadening out because we're just looking at today's activity. Yesterday, it wasn't broad at all, where the large cap tech went up and everything else went down. The day before that, it was just the exact opposite. The large cap tech went down and everything else went up. It seems like it's like a hot potato right now where things are hot one day and cold the next day. It is not a great trading environment for directional trading. It just is not good right now. And so anyone who's trying to do any really strong directional trading, you're in the wrong market. And until things change, you really want to back off on any trades you're making. We did get some durable goods orders this morning. The core missed, but the headline beat a little bit. So a mixed return on durable goods. We got some pending home sales that were a little weaker than expected. Everything is still pointing to an okay economy. Now, typically an okay economy isn't good enough to move the stock market higher. But guess what? An okay economy right now is exactly what the market wants. They do not want a market that's too hot. And look at this advanced decline line. We've been like right around 50% for the last 3 days. Some days it's a little above, some a little bit below. But look at the amount of stocks above or below the 50-day moving average, 50-50. This is about as mixed and boring as a market as you could possibly get. And if we take a look at the chart, I really want to take a step back and just show you we haven't gone anywhere for the last 7 days. Here's the range. It's a really tight base here that we're sitting in. And this week, you can see that we've had, down day on Monday, but then 3 days of just really mild buying. I want to make sure everyone sees this is, again, is it a low or a high base or is it a pullback? Look, I don't know. It could be either one. Who cares? If tomorrow's candle is a breakout, then all of a sudden we are back to the races. Tomorrow we have some pretty major news with the core PCE price index. If we get a move down, then all of a sudden we're just going to look at, hey, we're basing still. There's really not anything to expect for higher prices at this point. We got the NASDAQ here. We got the Qs, and you can see this is looking more of a pullback than a base. But again, tomorrow's candle, if tomorrow's candle is a nice strong up candle, then I think you look at that, say that's a pullback, and we're likely going to our next swing high off of this. As you can tell, I am either neutral or bullish. I am not bearish in any way, shape, or form. If we go over here to the heat map, this is more of a mixed day than we've seen this week. As I said earlier, it was either the large cap tech stocks were up and the rest of everything was red, or the tech stocks were red and everything else was green. You can see this is much more in the middle. There's not a lot of information here. It is just a day of just very, very slight more buyers than sellers. That's it. Nothing has changed. We're still at a +3. We're above the 20, above the 50. They're both sloping higher. Everything is still bullish, but we're not moving higher at a very rapid pace. This is consolidation. And we know we've seen it before, consolidation where you have a big run and then you have consolidation. You have runs, then you have consolidations. We understand that's how these bull markets work. We have no idea how long this consolidation is going to last, but the next move is likely higher to the upside. So I think we got to lean more to the bullish side still. That's what the market's telling us. Let's go take a look at some potential trades. I've got two bulls. I got one sideways for you. I haven't shared a sideways one in a while, so I wanted to do a sideways one. And surprisingly, I'm still finding some decent shorts out there. There's some good looking charts. Like WBA is a stock that I know a lot of our traders have been short, and it had a bad news today and took a big drop, I think about a 25% drop. There's still some good shorts out there, but I want to focus on a sideways today. On the bullish side, the first one I want to talk about is Dutch Brothers. All right, this is a Dutch Brothers coffee, and you can see a nice high base breakout. I absolutely love high bases. Now, as an early younger trader, I would look at these and say, no, they've gone up so much. Look how much it's gone up. It can't go up anymore. That was my mentality. Now I'm like, oh my gosh, look how much it's gone up, and no one wants to sell it. Wow, what a clear signal that it's going to go higher. You see the difference between the two perspectives? Like me looking at the reality of where this is. We got a nice breakout to the upside. So look, you can play any sort of spreads here, a 40-44, a 41-44, a 42-44. 44 is obviously what I'm looking at for a target. And you can see that's about where we're going to probably hit the next level to the upside. So this is in the consumer sector. And then we're going to jump over here to the technology sector. This is App 11, APP. And I swear these used to be called Digital Turbine, but they must have changed their name. Maybe I'm getting some stocks mixed up, but I'm pretty sure this is the one. This is a really nice bull flag pattern. There's been a huge run. Do you see how I like a little flag? Just like a little flag. So a huge run, and then has a very, very shallow downtrend. And where you want to buy it is when it breaks out the top of this area. We did break out of it here. It's sunk back down. We have no idea of knowing if this one's going to hold, but a green candle tomorrow is going to be a really nice confirmation that this one goes higher. Short term, I think you got to take a look at this 88 as some potential resistance. So I think that's about as optimistic as to get on the target. So as far as spreads go, I don't know. I didn't look on the options. He probably has dollar strikes. So I think you could easily take a look at like an 82.85 would be a very conservative play. You want to get a little more aggressive, you could even take a look at like the 84.87. I think that was going to be a little bit more aggressive here on the upside. But this one looks really solid to break out higher. And in that same sector, we've got a sideways with Marvell Technology. This stock looks absolutely stuck. Absolutely stuck. Take a look at those moving averages. Flattened out, flip-flopping on top of each other. We don't know how long this is going to stay in this range. It could be already moving out of it, but we know the range is clearly defined. It is from 62 all the way up to 76. I think you want to take a look at some prices. If you're going to be short-term, maybe you take a look at like at 65.70. That would be really short-term. I think you got to go a little wider than that. So maybe like at 62.50 if there's 250 strikes and a 72.50 on the butterfly. But I think you just want to be in this 69.70 area on your middle of your strike prices on your butterflies or your condors. All right, let's talk about tomorrow. We've had 7 days of consolidation. A lot of times with these bull markets, you get these runs, they get tired, they consolidate, and it really takes some news to get the excitement back in the market. We haven't had any news whatsoever this week that's going to reignite this market. We do have potential news tomorrow with the core PCE price index. It's expected to be 0.1. So if the number comes out as plus 0.1, I think the market is very excited about that. I think that is a good enough reading for the market to go substantially higher because they're going to be like, yes, we are definitely getting a rate cut from the Fed either in July or September. I think the rate cut hike odds are going to just shoot higher on this number. Let's say it comes in at a plus 0.2. That's going to be mildly bearish. But look, 0.2 is still well within the range of what the Fed is looking for. So where I do think it's bearish, I don't think it's all that bearish. I think you got to get up to like plus 0.3, plus 0.4, and that would be a real surprise to this market. So again, I'm going into tomorrow with this PCE report thinking I'm either sideways or bullish. I don't really see a call or a case to be made for there to be a bad number and the market crash tomorrow. I just think the economy's good. It's not great. Everyone's happy. Everyone's enjoying the summer. Money is coming into the market. Money is not coming out of the market. Likely prices are going to continue to go higher. So we're just going to follow what the chart says, and the chart says to be bullish overall. Thanks for joining me. Take care. Bye, everybody.